Nvidia reported an amazing earnings report. We already covered the earnings report. If you missed that, it's going to be in the top right corner. So what did we miss? Why is the stock currently down 3.4% while the overall market is green? What did we miss? Let's discuss that. Now, their market cap is under $3 trillion, and actually valuation-wise, it's a little bit cheaper than yesterday. It now has a forward PE of 37.1 times, cheaper than a 3-year mean. Yes, that's true. The stock has gone up quite a lot, but it's still cheaper than its 3-year mean. EV to EBITDA also cheaper, 30.3 times. Price to sales is still sky high at 20.5 times compared to 18.3 times. Price to free cash flow sits at 63.7 times, and then price earnings to growth still sits at 1. So yeah, I mean, you could say, yeah, all the others are very, very expensive, but I mean, price earnings to growth, 1, that's not expensive. And remember, the stock is still up 144% year to date. And currently, the average analyst price target has gone from $143 yesterday to now $146, representing around 20.5% upside from the price we're at today. So again, what has happened? What has changed? Nothing, right? Nothing much. The numbers were quite good. The comments were okay. Just the market doing its thing, right? Well, let's have a look at some other stuff and things that were mentioned during the earnings call and during some interviews as well. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Let's first start with a couple of price target upgrades. Well, actually all of them are price target upgrades. If you want to look at them all, you can pause the screen here, but basically everybody upgraded their own price target. Then a quick reminder of what was mentioned yesterday. Hopper demand remains strong and the anticipation for Blackwell is incredible. Customers continue to accelerate their Hopper infrastructure purchases while gearing up to adopt Blackwell. Of course, Blackwell was in the center stage, right? We shipped customer samples of our Blackwell architecture in the second quarter. We executed a change to the Blackwell GPU mask to improve production yield. Blackwell production ramp is scheduled to begin in the fourth quarter and continue into fiscal 2026. By the way, for those that don't know, this is second quarter fiscal 2025. In the fourth quarter, we expect to ship several $billion in Blackwell revenue. Hopper demand is strong and shipments are expected to increase in the second half of fiscal 2025, so in the next 2 quarters. Now, another thing is that Nvidia is known to beat the analyst estimates by quite a lot actually. But as you can see here, since Q2 of fiscal 2024, well, the beat has become smaller and smaller. It's still amazing, but I'm just trying to think from a Wall Street's perspective, what has gone wrong. So back then, well, a year ago, they beat by 22.3%, then 12.6%, then 8.3%, 5.5%, and now only 4.1%. And maybe the market is like, okay, maybe the next quarter they'll come even closer to analyst expectations, so why should we give it such a big premium? Maybe that's the way they're thinking. I mean, all in all, it was another very, very good quarter, right? If any other company reported something like this, you would have been up 10, 20% or so, right? If, let's say, Intel reported something like this, it would have probably been up 30%. But of course, Nvidia is no Intel, Intel is no Nvidia. Valuation-wise, they're nowhere near as well. Profitability-wise, same thing. So yeah, I mean, it's true, it is a very expensive stock, but as we've seen, if we are forward-looking, so making the assumptions that what will happen in the future will definitely happen or maybe become even better, then it's not that expensive, but those are just assumptions. Now, if you look at Q3, what Nvidia has told us that they expect, we know that it's probably going to be a bit higher than that, but still, they beat analyst consensus numbers by around 2.2% for revenue, gross profit, and operating income. So all in all, it was still a very, very good quarter. Now, a couple of things that Jensen said during the call and during some interviews as well. So hyperscalers are 45% of the data center business. Now, on one side, 45% is a lot, but on the flip side, you still have 55% that are not hyperscalers. Those sovereign AIs, every other company that is not a hyperscaler, etc., in various industries. So yeah, it's true that hyperscalers contribute quite a lot to Nvidia's success, but 55% is coming from the others. He also said that supply is improving every single quarter from now on as well. No plans to become a cloud compute provider, so no plans to compete with GSP, AWS, Azure, Oracle, etc., etc. They also mentioned low digit billion sales in sovereign AI and liquid cooling. Talked about liquid cooling, especially when talking about Blackwell. Why is that? Well, because the Grace Blackwell is liquid cooled. However, the number of data centers that want to go liquid cooled is quite significant. The reason for that is because we can, in a liquid cooled data center, install and deploy anywhere from 3 times to 5 times the AI throughput compared to the past. And so liquid cooling is cheaper, liquid cooling TCO is better, and liquid cooling allows you to have the benefit of this capability we call NVLink, which allows us to expand it to 72 Grace Blackwell packages, which has essentially 144 GPUs. I've talked about liquid cooling before when talking about Dell and SMCI. I mean, I've shown you comments from, I believe, an analyst and an expert talking about the difference between air cooled and liquid cooled. The difference is huge, and you save millions, if not billions of dollars worth of energy if you switch to liquid cooling. Which, of course, these things are great comments for the likes of Dell and SMCI, although SMCI, I believe, we're still waiting for some comments from management with regards to the delayed 10K. Now, moreover, here the H200 and China. So Nvidia's H200 platform began ramping in Q2, shipping to large CSPs, consumer internet, and enterprise company. The Nvidia H200 builds upon the strength of our Hopper architecture and offering over 40% more memory bandwidth compared to the H100. Our data center revenue in China grew sequentially in Q2 and is a significant contributor to our data center revenue. As a percentage of total data center revenue, it remains below levels seen prior to the imposition of export controls. We continue to expect the China market to be very competitive going forward. So at least we've got some positive comments coming from that corner. For those of you that did miss yesterday's video and still have not seen the numbers for the quarter, this is basically it. Tremendous growth year over year. Even quarter over quarter, these numbers are very respectable. Of course, they're not going to be 20, 40%, 80% growth quarter over quarter anymore. But I mean, growing 15% quarter over quarter is still quite good. And so right now, looking at the daily, well, it is now in a constant battle. Red, green, red, green, red, green. We're basically at the 20-day moving average here. The 50-day one sits at $117, which was basically where the stock opened, I believe, earlier today. The 200-day one sits at $92. RSI is neutral on the, let's say, downtrend on the daily. If we switch quickly to the weekly right now, we can see that RSI is high, but not overbought. And well, again, same thing, maybe 130 is a resistance. Got rejected there. Stock might make its way back down. Let's see. I think for long-term shareholders, I don't think you would mind buying Nvidia back under $100. So overall, to conclude, I believe the story here, the explanation is quite simple. The company still does what it has to do. It grows, it dominates. I mean, this is a company that, in my opinion, or last time I checked, never really lied to us or said something and then something else has happened. No, actually, it says one thing and it did it even better. Now, maybe the market was maybe expecting something amazing, I guess, right? Like that kid in The Incredibles. I don't know, something amazing, I guess. But no, they delivered. They delivered another strong quarter. I don't know what the market was expecting. $50 billion in revenue? I don't understand. It is growing. Yes, of course, growth will maybe slow down a little bit until they launch Blackwell. Margins will get hit in the short term as well. I mean, will get hit. It's still 74, 75%. It's still quite amazing, I would say. They still have a huge advantage, huge difference between the number 2, number 3 player. I mean, the thing here is that hardware is one thing. But when you want to make sure that people keep on buying your hardware, you better make sure that the software is the best of the best. And that's basically CUDA. Because we know that every other big company out there is designing their own chips. But because, yeah, I mean, from a profitability standpoint, you cannot buy constantly Nvidia chips and that's about it. No, maybe in-house you need your own chips because you can make it maybe cheaper, less energy required, etc. Okay, we've been talking about the fact that maybe 5-10 years from now, all of those hyperscalers, all of these companies will have their own chips and they'll need Nvidia a bit less. Maybe, but not everyone has the money to design their own chips. Plus, you have to design good software, and that's exactly what CUDA is. CUDA has been around for more than a decade. So yeah, I think they know a thing or two about that. So yeah, overall, good quarter, amazing company. If you can get this stock for less, then why complain? Will it go much lower? I don't know. I don't have a crystal ball, but that's about it. I think all the negativity that people are saying here is just to get some clicks and views or whatnot. I think we can see that Wall Street, despite the stock being down a little bit, Wall Street does know very, very well what Nvidia is and what Nvidia will be doing in the future. Maybe they're chasing the hype and the bubble has popped. Who knows? Remains to be seen. But right now, until they really show us a huge slowdown and margins explode on the way down, until then, I don't think you should be worried. Anyways, that's all I got for you right now. Leave a like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.